So basically, this is a sum of May-June 2021, paper 32, and we are referring to the property, plant and equipment schedule. Are you with me?
Yes.
Okay. So your B part is telling you that what do you have to calculate? The net book value of your non-current assets on 31st December 2019. Okay. Can you read this additional information for me, please?
Y Limited classifies non-current assets into three categories. The accumulated depreciation Y Limited classifies non-current assets into three categories. The accumulated depreciation at 31st December 2019 for each category was property
accumulated depreciation. Accumulated depreciation on 31st December 2019. So that means this is the accumulated depreciation at the start?
Yes.
Okay, can you tell me what is the accumulated depreciation at the start? That means I would say 1st Jan 2020. So it is how much? First you have property, right? First I have property, then I have plant and equipment, and then I have fixtures, furnitures and fixtures. Come on, tell me the amount, please, darling.
128,000.
Yeah.
168,800.
Yes.
101,200.
101,200. Okay, you can see my screen, right?
Yeah.
So what is the total? This is 398,000. Correct?
Yes.
Okay, fine. Go ahead.
The net book values of three categories at 31st December 2019 was in the proportion of 5:3:2.
Slowly, I cannot hear what you're saying.
The net book values of three categories at 31st December 2019 was in the proportion 5:3:2.
Okay, so the net book value on the last date. So net book value on the last date at the start or at the end? At the start or at the end?
At the start?
At the start was in the ratio of how much? 5:3:2. Okay, fine. So how do you find the net book value of the assets? Can you tell me?
Net book value we have already calculated in part B.
How did you calculate?
They said they've given the non-current asset turnover, so we
Yeah, come on.
so we divide the revenue with the non-current asset turnover.
So revenue divided by non-current asset turnover ratio, you got the net book value of your assets. So your net book value total was how much? 384,000. Yes? And
Yes.
this was in the ratio of 5:3:2. So can you tell me the net book value of property, equipment, and furniture?
Okay. For property, it's 192,000.
How did you get that? 384,000 into 5/10.
Yeah.
So what is the net book value?
192,000.
Yeah. For plant and equipment, it is 115,200. And for furniture and fixtures, it is 76,800. Yeah.
Yes.
Are you with me?
Yeah.
How do you get the net book value?
The
Take costs
cost minus
accumulated depreciation would give you the net book value.
Yeah.
So you have the accumulated depreciation, you have the net book value. So can you find the cost at the start?
Yeah, it'll be the net book value plus the accumulated depreciation.
Net book value plus accumulated depreciation would give you the cost. So 192 plus 128 would give you the cost at the start. Can you give me the cost at start?
320,000.
320,000.
For plant and machinery, 283,200.
Sorry.
For plant and machinery, 283,200.
How 115, 200 plus 168, 800 gives you how much?
284,000.
84,000. And for furnitures and fittings?
178,000.
178,000. So the total cost is how much? $782,000. Yes. Are you with me?
Yes.
Okay, fine. Now go to read your additional information. On 1st of Jan 2020, the property was revalued at 360,000. So the property was revalued at how much? 360,000. So this would be your cost at the end.
Yeah.
So what is your revaluation?
40,000.
Your revaluation is 40,000. Very well. Read ahead.
On 1st March 2020, office furniture was purchased at the cost 25,000.
So furniture was purchased, additions was 25,000. Yeah?
Yeah.
Come on. Go ahead.
On 1st July 2020, an item of old equipment was part exchanged for a new item.
So it was part exchange for new item. Okay.
Y Limited paid cash 34,000 as part payment for the new item.
Okay, you have paid cash 34,000 at part payment for the new item. And this old item had original cost of how much?
35,000.
That means there is a disposal of plant and machinery whose original cost was 35,000. Yes.
Yes.
Okay. You disposed this plant and machinery 35,000 that was fully depreciated. If that plant and machinery was fully depreciated, that means the net book value of that plant and machinery was 0.
Yes.
That item was fully depreciated. The net book value of that machinery was 0. So you disposed one item and you have purchased another item. Can you tell me the cost of the item that you have purchased?
It is 34,000 plus 8,000.
Plus the part exchange value. So 34,000 plus 8,000, it will become how much?
42,000.
42,000. So there is an addition of plant and machinery of 42,000. Yeah?
Yes. Miss, fully depreciated. Depreciated means
Fully depreciated means you have depreciated the entire cost. Now it has zero net book value.
okay.
You have depreciated the entire cost. Now it has zero net book value.
Okay, fine.
Okay. Fine, go ahead. So can you tell me
A
the
full year's
plant
depreciation
and
is
equipment cost at the end?
plan 291,000.
291,000. Are you with me?
Yeah. And
Okay,
for
fine.
motor,
So now for motor vehicles, can you give me this furniture and fixtures? Can you give me at the end?
203,000.
203,000. So your total cost at the end is 854,000. This is 40,000. This total is 67,000, and you will minus 35,000. Are you with me?
Yes.
Now, come on, tell me what is the depreciation policy?
A full year's depreciation is charged in the year of purchase and none in the year of sale.
Okay, full year depreciation is charged in the year of purchase and none in the year of sales. Come on, let's charge for property the depreciation.
Okay. Property would be
Straight line method for 20 years. So can you give me the depreciation charge for property?
yeah.
Can you please say and do?
Yeah. So the 128,000 would be divided into the number of years the asset is being used by the business. Well, sorry, it would be divided by 20.
Okay, can I say 320,000 is the cost of the asset at the
Yeah.
start?
Yeah.
20 years, 20 years. So per year it would be how much?
16,000.
Per year it would be 16,000. So 128,000.
Divided by 16,000.
128,000 divided by 16,000. That means you've already charged 8 years of depreciation.
Yeah.
Now,
Now the
you have done a
360,000.
revaluation. You've done a revaluation of 40,000, right?
Yeah.
Okay. So 8 years depreciation has already been charged. What is the remaining number of years?
12 years.
So the remaining number of years is 12 years. So first 16,000, so you will already charge for the original cost, right?
Yeah.
Okay. 40,000 is the revaluation that would be split between how many years? How many years?
12 years.
12 years. Will you split 40,000 for 12 years or you will split 360,000 for 12 years?
360,000.
Okay, split 360,000 for 12 years.
30,000.
So your revalued amount, that is your cost at the end. Okay, now you have to split this amongst the remaining life. The remaining life is 12 years. So 360,000 divided by 12. You will get 30,000. 30,000 is the charge of depreciation for your property. The charge during the year is 30,000. There is no disposal. So what is the accumulated depreciation at the end, that is 31st of December 2020 for property?
It would be 30,000 because you have to cancel the 128,000 that you already.
Okay, fine. So you are revaluing. The old depreciation will already get cancelled because of revaluation. Okay? Are you with me? Because you're
Yes.
revaluing it upwards. Because you're revaluing upwards, that means the previous reduction is already getting cancelled.
Okay.
Yes. So what is the net book value of your property at the end?
330,000.
Yeah, 360,000 minus 30,000, it would be 330,000. Now for plant and machinery. Come on. Plant and machinery, plant and equipment, 20% on reducing balance method. Okay. So what is your
Yeah.
cost? 291,000 minus accumulated depreciation. Accumulated depreciation is 168,800. Hello. Are you there?
Yeah, miss. Yeah.
Okay, 168,800. In this is the accumulated depreciation at the start of the year, correct? But you have disposed of one asset which is fully depreciated. You have disposed of one asset that is fully depreciated. So from this 168,800, you will have to remove 35,000, the depreciation of the asset sold.
Miss, why are you disposing the cost value?
See, from the cost you have 168,800, correct? At the beginning of the year. Then you will minus the accumulated depreciation 168,800. But I want the net book value of my remaining assets.
Yeah.
I want the net book value of my remaining assets. So my remaining assets is 291,000.
Okay. Okay, fine.
Are you with me?
Yes.
From the remaining assets, I will minus the accumulated depreciation of the remaining assets.
Okay, fine.
Remaining assets, I will subtract the accumulated depreciation of the remaining assets. So my accumulated depreciation of remaining assets would be 168,800. That is the accumulated depreciation at the start minus the asset that I have disposed of, and this asset is fully depreciated. That means the full amount of that cost is already depreciated. So this 35,000 is included in this 168,800. So I will have to remove it. So 168,800 minus 35,000. So this becomes how much? 131,800. Are you with me?
Yes.
So what is the net book value? 291 minus 131,800. So the net book value of the remaining assets is 159,200. Please take some time and digest and let me know if you're facing difficulties still.
So we're minusing the 35,000 because it's fully depreciated. Otherwise, we would have taken the
Depreciated. The entire cost is depreciated, which is included in the accumulated depreciation year.
Okay, fine, understood.
Okay. Now of this 159,200, you have to take 20%. So this will become how much?
It'll be 31,440.
How much?
31,440.
31,440. Where will you write the charge for the year? 31,440. So what is the total accumulated depreciation on the last date? 168,800 plus 31,440 minus the depreciation of the asset disposed. So 165,240.
It will be 102,360.
Huh? 168,800 minus 35 plus 31,440. One 165,240. Are you with me?
Okay, fine. Okay, fine.
So cost of the asset minus accumulated depreciation at the end will give you your net book value at the end, which is how much? 125,760.
Okay.
Now for furniture and fixtures, it is 20% on straight line method. So 203,000 into 20%.
40,600.
40,600. So what is the total accumulated depreciation? 101,200 plus 4,600. So it becomes 141,800. Cost minus accumulated depreciation. Can you give me the net book value at the end?
61,200.
61,200. Come on, add all of this. Give me the total accumulated depreciation and total net book value at the end.
The net book value is 516,960.
516,960. And what is the total accumulated depreciation?
337,040.
Yes. So this is the non-current asset schedule. Can you just answer the A and B part also for me? State how non-current asset turnover ratio is calculated.
It's the sales revenue divided by total net book assets.
Net book value of the non-current asset. Why does the company want to know this ratio?
To see how efficient the firm is in converting its
To
non-current
see
assets to
how efficiently the company is using its non-current assets to generate revenue. And now did you get the total net book value of the assets?
By dividing the revenue by the non-current asset turnover.
Revenue divided by the non-current asset turnover ratio, you got the net book value of the assets. Okay, so the non-current asset turnover ratio is revenue divided by the net book value. This was 2.1 times and the revenue was 806,400. So you got the net book value. And this was the property, plant and equipment schedule. So this completes the sum of May, June 21, paper 32. Correct?